Okay, Kamran, go ahead.
Um, we have discussed certain things related to this market in our last few webinars, and I was keep on saying the same thing, that in the coming months we are going to see some drastic changes. Everybody was aware that interest rates are going to go up. Nobody was aware how fast they're going to go up, but the most of us were surprisingly not ready the impact of the interest rates going up. We discussed it in our last meeting too, that the Canadians, especially our generation, we have never experienced interest rates going up that high. All we have experienced, interest rates coming down, which gives you more cash flow, and we use our houses as a piggy bank to keep on spending and spending. Putting everything in the past, whatever has happened in the past, some of my words, please don't mind. I'm not a typical mortgage guy. I'm not a wealth manager or a risk manager. I'm saying everything from investment point of view. So I'm an opportunist as of today, looking to find deals in this market. So as Sabiha mentioned, one of the realtor told her client that it's not a good time to sell because you will be losing money. I will not agree with that either. What he or she has been told is that, look, that in this market, if your house value was $4 million as of March, maybe it's 3.5 million as of today. But you can sell that house at 3.5 million and buy somebody else's house, which was 6 million, for 5 million. That's where the value is. It's all about approach. We discussed a term in our last session, which was called old money. What I am seeing is old money is getting into this market. People who were not part of this market from the last 5, 7 years, they are the ones who are entering into this market. They can see the value that within 1.5 years or so, this market is going to be way above than where it was in March and April. So being a realtor and me as your mortgage person, how can we help each other? I personally think, from a salesperson point of view, whatever happened in the last 15 years or so, it's not going to work. All of us have to change our mentality, the way things are changing and the way things are going to be after 1.5 years. We are all of us, we are in a fixed mentality, which means that Canada is getting 400,000 people as an immigrant. We have a boom in our economy. We can't find employment and everything. I don't think so. That's the real story. People who are coming to Canada, they are not dumb. They know what's happening in Europe. They know what's happening in the Middle East. They know what's happening in other parts of the world. It's a worldwide situation right now. Everybody's experiencing inflation. Everybody sees opportunities there. Why these immigrants? We have a record number of immigrants landed in the last 3 months. Less than 40% of that, they're not even buying this time. They used to buy before even coming to Canada because they know what's going on in the economy. So from the fixed mentality, from the fixed approach, we have to change our approach to growth mentality. Things are changing for good, which means we have to explain to our investors, people who are sitting on a lot of equity, is that we have to change ourselves. And how we're going to change ourselves? First of all, we have to understand how we used to sell properties to our clients. Oh, we're going to get positive cash flow, stuff like that. Nothing is going to work. We have an on average interest rate sitting at 5%. We have to sell our customers and our clients that rather than from cash flow point of view, we have to go for value now. I hope I can make you guys understand that when we used to work out the cash flow, we used to say, okay, you know what? We're going to rent out this property. We're going to get $3,000. Our cost of carrying this property is less than $2,800, $2,500. It's not going to work like that. What we have to show it to them is that we have to hold this property for the period of 3 years. 2 years, we might have a negative cash flow of $10,000, $20,000, but we will be laughing after 2 to 3 years.
Yeah,
So
because the prices
growth
now have
mentality.
become
We have to show
negotiable,
growth
right?
now. Yes,
Yeah.
we have to show them the growth. We have to tell them that the builders are slowing down their development projects. Inventory is going to keep on getting low and low from the builder point of view. That's one aspect. Now let's come back to the financing aspect, which is the most important thing. Banks, they are willing to lend and they will be more aggressive to lend. Some people think when interest rates are going up, banks are getting tight, their risk management is getting tight up to a certain extent, but the banks want to lend. What we have to understand is we have to adjust ourselves as per the ongoing change in the policies and procedures. And most of the people in my industry, they are not up to date, especially the people working in the banks, right? So the most important thing what we have to understand is do not scare your clients. Do not tell them. I personally think that yes, we will re-enter the market after 3 months, 4 months, 5 months. No, on a daily basis, there is opportunity in the market. Please sit with your clients who are sitting on tons and tons of equity. Tell them how can they unlock their property, equity in their property, and how you can invest on their behalf. The biggest mistake is that we have to change our clients' mentality, especially those who are looking to buy multiple properties. We are not going to see positive cash flows in investment properties. What we have to tell them is the value. The when we used to buy preferred stocks, same thing. These properties we have to buy from investment point of view, but from the growth uh, mentality, not as a fixed income point of view. We used to sell these properties, we will have appreciation, plus we will going to be getting income out of it. We are not going to see that much income out of multiple properties, but we have to tell them the growth, that we will see an upside in the next 2 years or so, but nothing less in the next 2 years. I hope I can explain to you what's going on with interest. Interest rates are going to stay high for 1.5 years. Nothing is coming down. The Fed was very clear. They mentioned that even if they have increased 1%, they're going to increase more rates, which means we are not going to be able to sell properties to our client just based on cash flow. So that's what I'm saying, the growth mentality. From the fixed income mentality, let's switch to growth mentality. It will be much, much easy to sell more properties to the clients. Am I right, Sabiha?
Right. So, I mean, I think I sent out my market update, Kamran, and I also put in quite a detailed view of what my thinking of what is happening and what will occur. I do think this is a time of opportunities for buyers, right? If you do have a property, or your clients do have a property, I don't know what Kamran feels about it. I'm going to throw out what my view is, what I've done myself. I purchased Kamran knows very well about this. I
Yeah.
purchased a property in March, at high peak time. Me and my partner at that time, we thought that we were going to flip that property very, very quickly. It was and I'll tell you exactly what it is. It's a detached bungalow, with two identical floors, one above the other. So the basement is not in ground; it's actually above ground, right? So you walk into the basement. We thought we're gonna fix it up. We're gonna flip it. We actually bought it on private lending because we were gonna do it so quickly. We thought within 2 months we were gonna flip this property. Market changed on us, right? And so I changed my mind. I decided that I'm going to keep that property. Now I am building a duplex in there, right? It's under construction. I was at the property yesterday with the contractor, and I'm building a duplex because I know what has happened to the market. Kamran and myself have always said this, that when the prices of properties are in flux, that has happened today for whatever reason it may be, right? It was COVID before, it was change of industry before in Calgary when oil sands situation happened. Right now it's interest rate. It is just one denominator that is changing the value and the purchasing habit of the buyer. The buyer tends to sit on the sidelines, on the fences. What happens to that buyer then? They become tenants.
Yes.
Right? So rental market across the board is absolutely in a crazy situation, right? People are there. Somebody told me yesterday they had 28 offers on a lease for a basement. 28 offers. So this is
Yes,
what's
that's true.
happening to the rental market. So I very quickly just changed my idea. I was like, okay, we're not flipping this property. We're going in, we're changing this property from a single use, right,
double.
into a duplex, and I'm going to rent this property, right? And I'm gonna keep this property. Even in the worst case scenario, in March, I bought this property that I can turn into a duplex for $840,000.
Yeah, very good purchase
A
price.
detached price. I'm okay. I'm in no
Even as of
rush
today, the
to get
value
rid
is
of
there.
it. Yeah, I just changed my view and my attitude. Now, what does that do for my clientele? I have, excuse me, Kamran, but prior to you coming into my life, I used to work with another mortgage guy, right? I was talking to him yesterday, and he was telling me that, you know, he has a property. 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 He has a pro I was telling him about it. Guess what happened? He told me, Sabia, can you look for a similar property for me? Just by doing that, what I did, and putting a positive note to what was a semi-negative situation, right? I actually gained a client. This is exactly what happened in 2017. I had taken out some equity from my house. I wanted to buy an investment property. The market went completely berserk on me. 2 or 3 months, I went around looking at properties in Mississauga. I wanted to buy an investment property. And I was so fed up of standing in lineup with $100,000 deposit with 30 people till 1 a.m. And I said, screw this. I went in and I bought a property in Northwest Brampton, a brand new property, right? When I bought that property, the guy who did the mortgage for me at that time, right? I bought the property for $540,000, a 1,900 square feet semi-detached, brand new built from Empire, which seemed like a lot of money at that time for a property in Brampton. Find me another property at that value today. So I was able to find him. So he started telling me, sell me this property. I'll give you $25,000 right now for it. And I said, no, I'll find you another property. So then from my investment, I was able to do another investment. So what I'm saying is practice what you preach,
Yep.
right? Be on the wave, guys. Like you have to be trendsetters, right? If you do not stay, and this is why I have all of these sessions where Kamran comes in and we talk to you guys about it, because if you are not believing in the product that you're selling and what's going on in the market right
Don't worry,
now
you'll
is
find.
the opportunity. Right? You
Yeah.
may, what some Kamran is saying is 100% right. You may not be able to make money on in a positive cash flow. I'm not 100% sure of that because Kamran, the rental market is so stupid right now, right? And
Depending if you
people
have
are
much
so
less,
desperate,
yeah. You
right?
guys know better than me on the values and everything
Yes.
because you have the
And
data.
and then again, like if you look at the right areas, right? I was talking to Bain yesterday, and Kamran, there we are even in this house that I bought, guys. So the house is a perfect square, right? And the garage is inside the property,
Uh-huh.
right? It's not an attached garage. Literally it's inside the cubicle of the house. And so we sent in a application for permit because we're allowed to take in the garage into the property. So the second floor, we're making the garage into a kitchen. I was
Then you
talking
know,
to Bain, and he shared this Instagram page with me where there all of these people, even in Mississauga, that are turning their garages into residential, bedrooms or whatever.
yeah.
So
But we
there's
have
so
to
much.
has to. Sorry, go ahead.
Yeah, so there's Airbnb, there's student rentals, there are all of these people that are coming. Kitchener-Waterloo has a huge IT community,
Yeah.
right? Where there are all of these single people that are working there in that community, and they're looking for one bedrooms, two bedrooms. So you have to even now start thinking about multi-residential rental properties in one house where you can
Yeah.
have multiple tenants, right? So this is that time to start thinking like that because there will be a lot of people who will not be able to jump into the game to purchase because like we had an increase yesterday. We're going to have another increase in
Yeah.
September, right? That will
Number
bring the
two.
value of the properties down. Kamran, do you want to shed a little bit of light about what difference it does in terms of your payments annually
It's
or monthly?
It's very straightforward and simple. For example, let's talk about five major banks in Canada. National Bank, Scotia, whenever there's an increase in interest rate, they will change your variable mortgage payments right away, which means that every month or every increase in interest rate, you're gonna have a higher mortgage payment. Other Canadian banks, now they're all thinking and they will be sending the letters pretty soon. Imagine if you were sitting on a variable mortgage on April of this year, and since then, we have two major increases. So whatever your monthly payment is, almost 95% of that on a variable mortgage is going towards interest. Banks are not in the business to take interest from you. They're in the business to make sure that you pay enough share of your mortgage towards principal too. So all those banks are also sending letters out that they will be raising and adjusting your mortgage payments. Why I said this thing? What we have to understand is there's enough buyers in this market There's tons and tons of buyers sitting in this market, but the issue this time is they might have down payment money and the closing costs, but the monthly budget, that's where they're getting squeezed, right? So what we have to tell them is that how much monthly budget has changed. For example, if you were borrowing, let's say $2 million, I'm just giving you a hypothetical number, I don't have a calculator. On a $2 million, let's say your mortgage payment was $6,500 or $7,000. With these interest rate hikes since April onward, maybe that number has changed to $8,000. So what is the difference for the payment? $1,000, maybe $1,500? $1,500 multiplied by 24 or 12. How much is going to be? $25,000 or so. But the property he's buying is at least $7,000-$10,000 cheaper than where it was in March or April. So this is what we have to explain them, that look at a bigger picture. Do not be a penny cruncher. The problem is the mentality has become that we calculate thousands on a monthly payment, but we don't realize we're paying millions on the property. So that's what's happening. The people I'm working very, very like frequently, they have changed their selling techniques. They have realized that the clients needs to be told that get out of this fixed income mentality and go towards growth. So that's where the growth is. You're buying somebody's property a couple of $100,000 cheaper where it was a few months ago. That's where the value is. Not that your mortgage payment was $3,000 and now it's $4,000. And this is a big selling point. Now, what's going to happen is even for the rest of the year and even for the next year, we are going to see interest rate hikes until the economy is officially in recession, and maybe by next year in the summer they will start cutting down some rates. But keep in mind, the interest rate will never come to the level where it was in the last 5 or 7 years. They will stabilize these interest rates close to 3.9 or maybe around 4% or 4.25%. It's not going to come down that low. But you guys have more data. You guys are in the field. You deal with builders, developers. The cost of replacement has gone up. Wages have gone up. Everything has gone up. Builder is not in a position to deliver you a semi-detached in GTA for $1 million or $1.4 million detached house. Absolutely not. So whoever is buying at this time, even if it's an investment property, it's a negative cash flow, trust me, they will be laughing, because the only comparison you have is with a builder. They are the only one who's going to supply extra houses. It's going to be
Right.
very sharp turned this time after 2 years. That's what I'm simply trying to tell you, is that tell your investors or the clients who have equity sitting in the market, do not go for monthly cash flow. That's one of the, because Sabiha has 2 units in her property. So that's why she's managed to get the cash flow. But some of these properties, legally, you cannot
Sabia
create 2
will have
units.
2 units.
Or you
Sabia's
will have.
constructing
Okay.
units. I will have.
So there are tons and tons of properties out there which don't have a legal basement apartment or don't have a legal unit in it, but the value is good. Put that negative cash flow on the side and look into those opportunities. That's where we have to show to our clients. Most of my clients right now are those who are upgrading themselves in this market. I have a client with me yesterday. The property was somewhere in Brampton, close to Mississauga Road and Steeles Avenue. The property was appraised at 2.48 million. He's selling it for 1.98 right now because of today's market. But the best part is he's buying somebody's property which was 3.5 million for only 2.4. This is exactly what I was trying to tell you. This is the best time for someone who wants to upgrade the principal residence. So even if he lost $400,000 on his property, but he's buying somebody's property $900,000 cheaper where it was at its peak. So that's what I'm trying to tell you. There's enough buyer in this market for all kinds of properties. It's just the approach has changed. So that's what I teach my clients, that do not look into monthly cash flow anymore. Look at a much bigger picture where this market will be after 2 years.
Mm-hmm.
And it's
I want to
working
just throw
perfectly.
out, yeah, I just want to throw out a couple of bigger ideas very, very quickly, based on what Kamran has said. So a couple of things that has happened, right? When you're listing a property, guys, if you're talking to somebody listing a property, I would tell them to price it at what last year exactly the same time prices were. Okay, you would be okay if you list a property at that price. When people think that they're going to lose money in doing so, they're not losing any money at all. If you bought that house even 2 years ago, you still made a lot of money. Usually, generally, when people are selling a property, it is their principal residence to buy another property, right? So the market balances itself out regardless, right? What you sell it today, you're going to buy it today. But however, if you bought a property 2 years ago, you've still made plenty of money on that property if you're selling it today at the prices that were there last June or last July, right at this time of the year. Okay, so that's how you price a listing. This is what you tell your clients is you've not lost money. Remember, you've gained a lot of money because you've held it for 2 years or 3 years or 5 years or 7 years. So the benefit has come from the previous 5 years, right? That's number one. Number two is if you're working with an investor, try to explain to people how what I did with my property, right? Every property has the potential to have multiple units in it until unless it's a condo. And even if it's a condo, if it's a two-bedroom condo in Toronto, I have a two-bedroom condo. I have two guys that live there. They're both working for financial institutions, and they rent the place. They keep the place spotless. They're great tenants, right? So multiple use properties is something you should consider, right? I was mentioning Bain, he's building garage in the garages residences as well. So there's a lot of potential out there for it, right? Another thing is when market is like that, the rental market is very, very good, right? So you have to let your clients know is it's easier to find tenants because there are not so many people in the market purchasing property. Kamran mentioned even at the worst case scenario when they stabilize the market, the interest rate, if it's at 4%, right?
Yeah,
What have we
so now
seen in the previous years? We've seen an average of 10% increase on value annually on properties, meaning in 10 years your property doubles, right? So what if it stabilizes at 4%? You're still making money.
still making money and
Yeah,
the
you're still making money even on the interest rate hiked, right? Even when I sent in the averages, what were we looking at? Toronto market was the only market which had only increase of by 5% year to year. Between last June and this June, the increase in Toronto market was the least amount, which was 5%. In Mississauga, you were still seeing a 12% increase year to year. Remember, I'm not talking about between March and June. I'm talking about
yeah,
June to June.
to
So
John.
now if I had a property that I bought last June at $100,000 and I can still sell it for 12% increase. Can you imagine how much money I made from last year to this year? I don't know how many of you guys joined on Monday when David and I had our coffee meeting with our realtors. Guys, I asked Salva to share her story because I've been through that process with her. Her client bought a property in Oakville for $600,000 2 years ago. That guy just sold his that same property for $1.3 million last week, right? Where's the problem? I don't understand where the problem is
I,
in all
I
of
I have
this.
one thing to say. I just want to add on to one thing. Remember, Sabia, we had this discussion last time, and I said something which I learned a long time ago. In real estate, you never lose money as long as you're doing a transaction against a transaction.
Yeah,
As long as you're doing a transaction against a transaction, you never lose money. If your investor is saying, well, if I should have sold this property in April, I could have made 1.5 million, now I'm getting only 1.2 million. Nothing is wrong with that. Sell it for 1.2 million and buy somebody else's property, which was for 2 million for 1.4 million. Because I deal mostly with people who have multiple properties, that is my take on it. I have very little clients who have individual properties. I deal with people that keep on selling and buying regardless it's a recession or a boom. As long as there's a transaction, you don't lose money. You just have to make sure you buy the right property at the and you're paying the fair price. So I don't see where the problem is. I think it's just there's too much negative news in the market, and all of us are just lost. That maybe Armageddon happened. This market is going to collapse. We don't see any issues. Our volume is picking up even more than what used to be. Why? Because now people are more scared. There's nothing to be scared as long as you're doing a transaction against a transaction. Simple as that. If you are selling and you're parking your money on the side, that's the problem because you don't know when the market is going to turn around. And when it's going to turn around, you're going to be losing money, right? So
of
transaction
course,
against
because
a
you don't know
transaction.
which way it's going to turn,
Yeah.
right? Also, there's a couple of questions that have come up in the last couple of days that I wanted to also talk about is somebody asked me that, are people having problem closing their properties For sure, appraisal values are coming lower. If you bought a property right before March, between February, March, if you bought a property for your clients, they haven't closed it, they're closing today. There are some that are coming up, the appraisals are coming up lower, and people are seeming to be short, right, on 50, 60, $70,000. David mentioned somebody had a difference of $300,000. That's a problem. But now, today, whatever had to happen has happened. So moving forward, if you sell a property, list a property, sell a property today, if you guys just hold this idea, if you list it at last year's market value, you will have no problems with your clients. And you have to be smart when you're listing as well, right? You have to make sure that your clients are safe. People think that the biggest number on an APS when they're a seller is the best number. Sometimes it's not. Sometimes you have to make sure that that is a realistic number, that the bank will end up giving money, because banks are very smart, guys. They did this in 2017. They did this in 2009. They did this in 2019. Whenever the market was in a slight check, right? They're doing this today. They don't send the appraiser in till the last week before the closing. We have 2 months, 3 months closing, right? And the bank is going to give you a pre-approval, but the money is not going to come to your clients till the week before the closing happens, right? They don't give the commitment. They send in an appraiser and they're going to appraise the property at a lower price. So make sure that when you're at the listing end, you make your clients understand that they should not be greedy with a number on the dotted line, because that doesn't mean everything,
Yeah.
right?
And from my point of view, trust me, banks are willing to lend and they will be more aggressive to lend, because as the volumes are going down, they would love to lend. But it's just that you have to be more creative, more up to date with their ongoing policies and procedures. The only thing is change in the banks is the risk managers. Now, before you have more credit managers involved in lending, now you have risk managers involved in the lending. So please educate yourself. Any questions, if you want to ask me, I will address you that the clients who have multiple properties or the clients who are willing to buy multiple properties in this opportunist time, ask me, I will give you my point of view. But please keep this thing in mind. Banks are there to lend and they will be lending. Some people start saying that, oh, maybe we have a liquidity crunch or we have a credit crunch. No, this time it has nothing to do with liquidity crunch or credit crunch. There's enough credit available out there. It's just the cost of the credit has gone up.
Yeah, sounds good. I see, Kamran, that you have 10 minutes to spare. Does anybody, I'm going to open forum, anybody has any questions?
Any specific
Guys,
question
remember
or
this
general
this whole
question?
session is for you guys to take this information and transfer it to your clients.
Yeah.
Yeah, I have one question for Kamran.
Yes.
Cameron, like we bought two pre-construction, just like one last year before Christmas, one in January. As I was wondering, like, is that going to affect on their appraised value? Because I think we got on the peak time, right? So
it
like
depends what you have bought. It depends where the what price you have paid. It depends where the properties are located. One thing is for
one
sure.
is one in Mississauga M City condo M2, and other one is Uptown condos in Brampton, townhouse project. So
When are they
as
closing,
Sabiha
Rajneesh?
mentioned,
one is, I think, closing they postponed till January 2023. Other one is 24, I think, in the beginning. So I think I have a time for to maybe readjust, reset the market by then.
Not
hopefully, I
just that,
think
Yajneesh. So pre-construction, we've chatted about this before. Pre-construction is a safer bet in a volatile market. What is really affected is resale, because resale, what was in March, right, to April, situation changed. And properties close very quickly. They close within a month or 2 months. So you feel the change very, very rapidly. Whatever was approved today is being seen within 3 years or 2 years or 5 years. More than likely, it balances out. For the simple reason is that you're still seeing an increment. You're just seeing a shorter increment. So the So it softens the effect of the market change, right?
Um,
Why? Because our market change is happening not because of any reality. No other place in the world you make money like this in
Yeah.
real estate, except for places like Bombay or Dubai or New York City or London, central London, right? Toronto is one of those places, Hong Kong, Singapore,
Still
these
right.
places you make money, right? So in a place like here where you're still making money, where there's issues, there is no issue, right? The interest rate is the only effect. Like Kamran said, we've seen more immigrants come in right now than in the last 3 months than the history, right?
yes,
But
for
you
sure. The
can,
So
rental market I
let
know
me
has
answer
gone
you
up
one
quite a
thing.
bit too.
One thing you have to understand, when
yeah,
the builder is developing a project, regardless a condo or a subdivision, they are using institutional money too, right? If people are crying the mortgage rate has gone from 2.5 to, let's say, 3.5, imagine what is the cost of construction. The construction loans have also skyrocketed, and most of them they're also on a variable rate. So you tell me, if you book something 2 years ago, getting delivered in January 2023, if a builder is starting a project in January 2023, what price he will be selling it? And what is his cost of borrowing? So the replacement cost has gone up. That's what I'm trying to tell you. Now the market has become, view it from a growth point of view. This thing will settle in 2 years' time or so, right? The replacement cost has gone up. The builders and developers, they're slowing down the process now just to make sure that on an individual basis, people are getting panicked, but on the institutional basis, they know it's just a settlement time. So whoever has money, whoever has the right advice is going to accumulate more assets at a very, very discounted price. That's all I'm saying. I'm a buyer in this market. I get advice from my advisors. What is getting listed? What is getting sold? I'm a buyer. So as Sabiha said, if we are going to be examples for our clients, it will be easy for us to have that confidence in them that, look, being a realtor or being a finance guy, I'm a buyer in this market. And the clients ask, are you planning to buy something? And I tell them, I'm looking for it. And if it's something comes as per my risk appetite, I will buy it. But if you start telling them, okay, you know what, let's not buy today, let's not buy tomorrow, let's wait another 3 months, 6 months, we are losing our clients. So I personally say that whatever you have bought, right, you are just have to understand that the cost of replacement has gone up. Maybe the increments are not that high or double digit, but you are safe. And the banks know that. And the appraisal will come, whatever you have bought it for. Did I
at
answer
least
your question?
My question
pre-construction is not
actually,
as volatile.
Yep.
actually, Mike, I want to correct myself. My question was the appraised value will hold for pre-construction, not.
For pre-construction, bank will appraise only based on your agreement purchase and sale. They don't see what is the market value of that condo. As long as the appraiser supports the agreement of purchase and sale purchase value, we are good. For example, I have a unit, let's say in Exchange District. I was offered, God knows whatever, but when the unit is going to be ready, the bank is going to see what is written on the purchase price on an APS. And whatever you have paid for your units, I'm pretty much sure it's more than 1 or 2 years old price, right? And the value, I don't see it because we are doing mortgages for our clients. We don't see any problem with the pre-construction condos with the
Yeah, that's
builders.
why my question is from you.
Yeah.
Like, if you
As
see
of
any.
today, the value is there. Whatever was
Okay.
bought 2 years ago, the appraisals are coming.
Okay, thank you. That's what.
Right, sir?
Dina has a quick question. Dina, was this a pre-construction?
Yes, it is.
Yeah.
We
No,
got it
they
like
should be able to
last.
make plenty of money on it, Dina. We were just looking at Connect condos right now before I got into this session, and people bought Connect condos through the brokerage last year in pre-construction. Already the prices have gone up. Yeah, we can look at that actual
Because
property, you and I, but they should be making money on it if it's pre-construction.
yeah, it
On
is.
that note,
Okay.
guys, I sent out an email for us to meet Tuesday at 1 o'clock in Vaughan. If anybody is interested, I would highly recommend that we go and meet with this at this development site in Vaughan. So please let me know if anybody is interested. I sent out the email yesterday. If you haven't seen it, please go over it.
Okay.
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 Okay, Kamran, we'll let you go. I know
Meeting.
you're on a time crunch. Thank you so much. Guys, I
Pleasure.
hope you found this session useful. and helpful. You know, we have to keep regrouping to make sure that we are all on the same wavelength, and because we are the bearer of the news, right? So if we start spindling out of control and getting nervous about situation, then we can't help out our. It's times like this when people should be buying.
Sabiha, I have one question. Somebody called me yesterday, my client. She has a property in Guyana. She wondering if my brokerage deal with the international selling. I said I'll talk to my broker.
Sorry, where?
Guyana.
Guyana?
Guyana. Trinidad, Guyana. Somehow we have network. Somebody dealing with for international.
No, we don't.
Okay.
Yeah. I would be careful about that.
Yes. No, I said I'll.
Yeah, we can talk about that. We need to be, yeah. Okay. Right. Okay, guys. Thank you very much.
Thank you.
Bye.
Take care.
Bye.
Thanks.
Thanks a lot, guys.